Working 2 jobs to raise a family and pay off a mortgage is no easy task, as Andrew Harwer will tell you.
I'm feeling a lot of pressure. I may need to spend more time away from the family, which is never ideal, but it is, at the end of the day, what I'm doing this for.
The last thing he needs on his plate is higher borrowing costs, which the RBA just delivered. That's forcing the family to consider some tough decisions.
Do I need to find a 3rd job or ask my wife to go work full-time as opposed to part-time?
The Reserve Bank governor says the rate hike was necessary.
I understand they're disappointed. I do understand that for mortgage holders, this isn't a great outcome.
The RBA lifted the cash rate to 3.85%, its first increase in more than 2 years, and a reversal of the rate cut last August.
The board members are uncomfortable with inflation at the level it is.
If lenders pass on the hike in full, a homeowner with a $700,000 mortgage will see their repayments rise by about $105 a month. Over a year, they'll pay an extra $1,263.
It's obviously going to be an additional cost, so yeah, something to consider.
I think everything's gone up in price.
A lot of people are hoping the Reserve Bank is one and done with the rate hikes, but should they be expecting the RBA to undo or reverse more of last year's rate cuts?
I'm not predicting there'll be more rate rises, but I'm also not saying that if inflation does remain too high, that there mightn't be.
The last rate cut in August, in hindsight, would that have been a mistake and there was a bit of regret about it?
I think we were doing the right thing. Circumstances change, we change.
The RBA has revised up its forecasts for underlying inflation and doesn't see it back in the target range of 2 to 3% until June next year, prompting economists to consider the case for more rate hikes.
Their forecasts assume, in line with current market pricing, that the cash rate will get to 4.2% by the second half of this year, which implies at least one more increase in interest rates after today's.
I think it certainly could result in more rate hikes because the inflation problem isn't under control yet.
It's not great news for the Treasurer either, who's been accused of stoking inflation with too much government spending.
As mortgage holders are hit with their 13th interest rate rise under Labor, will you now finally take responsibility?
There are a number of economists who have pointed out, as have the Reserve Bank today in coming to their decision, that the uptick in inflation, the pressure on the outlook, is coming from private demand.
My view, and that of most other economists, would be that strength in government spending has contributed.
Apart from Japan, Australia is the only other major economy to start lifting interest rates again, so it's an outlier in that regard. And unlike other countries, Australian borrowers are especially susceptible to rate hikes, as most of them are on variable rate mortgages. CanStar's Sally Tyndall was urging borrowers to take a closer look at their repayments.
The average variable owner-occupier will be on a rate of around 5.77%. But you want to be below average when it comes to your mortgage rate. In fact, you want to be as low as possible. A competitive rate is likely to be around 5.5%.
Andrew Harwer is also thinking of refinancing, but he'll have to tighten his belt for now.
Unfortunately, my son's going through a phase of Lego craze, and mate, those aren't cheap. It's hard when you have to say no to your son to their face, but they don't understand yet.
Understanding a rate hike is one thing, accepting it is another.